This is our Forex blog for September 28th, 2011. And like most days, we really want to buy the strongest currencies versus the weak. You know, some of the best and highest odds trades are when all the time frames line up. In other words, the real-time currency strength on the top matches the intermediate time frame, which really varies from 30 minutes to about 2 hours because it's made up of multiple different tools of different time frames. Some of them flip faster in some cases than others. You know, our tools are very sophisticated. We measure both the direction of the dollar versus other pairs and the intensity of that direction. So anytime you see a plus 80 green level at and above 80, it's an extremely strong trend that, you know, the majority of dollar pairs are going up, and they're going up with above average intensity for that time of the day. Underneath that, like I said, is the intermediate time frame, and then we have the daily, weekly, and monthly. So really, in a perfect day, you have the real-time, intermediate, daily, weekly, and monthly up on all time frames, like you see here in the pound. You know, we had about 2 hours of weakness come in, but if the longer time frame trends are strong and you see some strength coming back in here at 6:30, it's safe to assume that the majority of the time, or at least over half the time, and that's all you really need to worry about, that trend will last long enough to make some money off of it. You know, and again at 9:30 when it had incredible strength and it had time frame, all the time frames are up. Those are the best trades. Sometimes you have a currency that, you know, multiple time frames are going in different directions. So on those, I would focus on the real time, maybe the intermediate, and then the weekly. If the weekly matches the monthly in the dollar, for instance, and you see a couple hours of weakness here, and then at 8 o'clock some strength comes back, it's safe to assume, you know, because the dollar was strong and the monthly's strong, the weekly just shifted down for about an hour. It's going to switch back up if this lasts, you know, more than a half an hour. That, you know, at 8 o'clock right here, you could definitely trade the dollar to the long side. You know, at 8:30, the euro became weak, but it was strong all day, so I would probably have avoided that one. 8 o'clock, we have some weakness in the New Zealand and also the Australian, which are down on all time frames. So at 8 o'clock, this is a trade that we know the dollar only has strength for about an hour, and at 8 o'clock, this quickly shifts from being extremely weak to somewhat strong. But nonetheless, let's look at a trade that doesn't work. You know, I always tend to show examples of trades that work. Let's show a trade that doesn't work and how to handle it. 8 o'clock, weak Australian, strong dollar. You have the currency, it's above the hourly, it pulls back, comes back above it. You might have went short right here. And as the currency goes down, you can see it fell about 10 pips. That's enough for me to move my stop from above the swing high to maybe 3 or 4 pips below break even or to break even. And when this came back up, you would have got stopped out with a couple pip loss. You know, and that's basically the nuts and bolts of it. When trades don't work, a lot of times when you use our currency meter, they go 5 to 12 pips your way, which is enough to cut your stop in half. If your stop's 10 pips, you end up only losing 5 pips. And sometimes, you know, when you take trades that are likely to give you 20 pips, sometimes you get 15, sometimes you get 20, and sometimes they take off and you get 50. For example, earlier today, very strong euro on pretty much all time frames except the monthly. The dollar was weak earlier today in the intermediate time frame trend. The daily trend was down. The weekly trend is just barely up. I care more about the weekly than the monthly. The monthly is too slow in switching, so you know you can have 3 to 5 days of strong counter trend move before the monthly trend switches. So the euro dollar against buying the euro versus the dollar, not a bad type trade today. One of the rules that we have to focus on getting rid of some unnecessary losses is using the hourly moving average, which is a gray line. This is our containment band, which is a dual purpose tool. It shows the hourly moving average in this case and the upper containment bands, which statistically are likely to stall and reverse price. Most of the time, price does not go beyond the white band. So when it gets up here, you know, we want to trade with the trend until it goes to that level, and then we want to look for counter trend trades to trade it on the way down. And that's exactly what happened here. So at 3 o'clock, you can see it was underneath the hourly, had a false breakout, came down, didn't make a lower low. You buy this breakout right here. Here's your first profit target, monthly S3 pivot. It's about 15-20 pips away. And you can just simply use our IntelliStop, which are designed to get you out of trades with the maximum profit. As soon as the real-time upwards momentum slows down, we tighten the stop, as you can see right here, and you would have been out of this trade somewhere around 25. In this trade right here at 89. So that's a 35 pip profit while risking 10 pips. And like I said, most of the time when you trade with our currency meter, if your stop's underneath the low right here, or even if it's 10 pips underneath where you bought it, as soon as it goes up 5 to 12 pips, move your stop in half. 10 to 15 pips, move your stop to break even. And you might have exited half of your trade here at this resistance area because it had trouble getting through it. And then exit the second half here, or when it went to the 10-day moving average and had a false breakout and came right back down. You know, you might have got out of 29 of half, 15 of half. You know, let's just round up a little bit. Your average exit would have been around 22 and around 90. It's a 30 pip move. Again, while risking 10 or 12 pips initially, very quickly cutting your risk in half. Very quickly after that, cutting your risk to break even. And, you know, that's it in a nutshell. Once you see a strong trend like this, you want to buy the pullback. And one of the ways of doing that is just draw your trend lines over the bars on the pullback. Especially if a pullback finds a support level like the hourly and can't break it, you go long, and you can see our Intella stop got you out right here. Pretty much nailed every pip there was, out at 72 in this trade in around 05. So that's a 65 pip move right there. Let's take a look at our range bars, which I leave running overnight. Hopefully I didn't have any data issues last night. We'll bring up the euro dollar, if I can find it. All right, here we go. Here's the euro dollar on a range bar. This is a 6 pips per bar range chart, and there's a lot more trades to be had on this too. 3 o'clock, the euro got strong, the dollar was weak. You might have bought this breakout right here. And again, you have smaller risks on a range chart because you can, a range chart is a 6 pips per bar chart. You can put it to anything you want. If you want a 5 pips per bar, 10, 11, 12, 13, 14, anything you want within reason. I mean, 2 million pips per bar range chart would be moronic, but you understand what I'm saying. Once the currency goes up and goes sideways, you want to move your stop underneath there or even exit half. And most of the time, markets don't go beyond their fib targets. So you draw your fibs on this, and look where it went, right to the fib target. So you exited half here, half here. Your profit would be somewhere in the middle, somewhere around 25, and you might have been in here at 83, and you made about 35 pips. This shows the Build Your Own Trend tool, which is allows traders to customize our very powerful, statistical tools. The top one should measure direction. The bottom two measure the intensity of direction. And I like to weight the bottom two at least 40 to 50% of the overall weight. We have a video on our site that explains this. I'm not going to waste it in our Forex blog. This tool only works live because it has so many different time frames. But you can see anything that hits this extreme level right here, you get a pullback with not much weakness. And I prefer at least a 10 or 15 pip pullback. So in all honesty, I probably would have bought here, put my stop underneath the low. You don't know what's going to happen in the future. This starts to go up, comes back down, stops me out. I lose 8 or 9 pips, or even maybe 6 possibly if I would have tightened my stop. And then it goes a little bit lower. Again, there's no weakness, so I'm not worried about buying it again. Rarely are you going to have 2 losses in a row. You get in this trade, it kind of goes up, comes up, and you can see a lot of strength right here. As it goes sideways, that strength disappears. I might be out of this trade right here at 23. So that's a 20 pip profit. Even if I did lose 10 pips the first time, made 20 the second time, I'm up 10, even if I missed the first, big move. And then we got to pull back again. And luckily for us, this trade worked, unlike the first one here. And you can see it kind of went up with a lot of strength, kind of ran out of steam up here. Maybe you got out somewhere around 46. You're in this around 20. And so you made over 20 pips on that one. And guess what? We got another pullback. And this pullback's, the best of all of them, because anytime you see extreme strength on the way up, and I went over this earlier this week, a pullback with no red whatsoever in it, that trade's probably set, in my opinion, and this is just my observation, don't take my word for it, go look at charts yourself, write down the stats, come up with your own numbers. I'm sure everyone, 100% of you will find that this works more than half the time, but whether it's 65 to 80% of the time, it might vary based on the examples you use and the settings you use for the Build Your Own Trend tool. But the settings that I use, that I showed here, it works a high percentage of the time. And as you can see, it's going up. Doesn't quite have the same momentum. So I probably would have exited half here right at the high because we have a lot of false breakouts. And then it shoots up And it looks so strong that I probably would have held on to this until maybe here as it started to pull back. I would have expected it to continue with that kind of momentum. So I would have been out at 73. But you can see that trade, you're in around 46. Maybe your average exit would be 65. And you made another 20 pips. Right? I mean, that's it in a nutshell. The range charts make it easier, in my opinion, than the 5-minute charts, as you can see on here. This pullback doesn't quite look as good as it did on the range chart. And there's also, I think, a pullback right here on the range chart that you can't even see on a 5-minute chart. You know, there's more opportunities on a range chart. So I highly recommend everyone trade using our range charts. Let's look at some other trades today. CAD from 330, pretty much weak on all time frames, except just a hint of mild strength on the monthly trend. So the euro was strong today, and the CAD also was weak along with the dollar. So, you know, basically what you want to do is buy the strong euro versus the weak CAD from, you know, 3 to 8 or whenever the euro stopped being strong. I'm going to bring this chart up here, and I'm going to show it on the 5-minute chart, then we're going to show it on a range bar chart. Notice from 3 to 8, this went up 10, 20, 30, 40, 50, 60, 70 pips. And there doesn't appear to be really any places to get into this pullback. You know, this just goes up, goes sideways, goes up, sideways, up, sideways. One little tiny pullback right here, maybe one right here. Let's look at it on a 6 pips per bar chart. Sometimes when I leave the software running for 3 or 4 days, you know, eSignal has problems sending us data, so hopefully this works. Should be in by now. Let me check my eSignal data manager. Yeah, it's connected. Yeah. Hopefully this comes in. Well, it's not coming in. It oftentimes happens when you leave the program running for a couple days. And in my case, I have 2 versions of the software running at the same time. So, you know, eSignal doesn't seem to like that. Let's go to a 2-minute chart here. Oops. Yeah, it's not even letting me get... so anyway, but nonetheless, this is an odd pair that most of us don't trade, but you can see it went up and kept going up because currency meter showed the euro was strong and the CAD was weak. During that time, the pound showed incredible weakness, but it was also one of the strongest, you know, daily, weekly, monthly currencies. So, you know, if it were me, I would kind of wait for the pound to show some strength here at 630 and possibly, you know, buy the strong pound versus the CAD. After 630, you can see right here, this one went up about 30 pips. You know, it went up, pulled back, and then went up at 30 pips. So there's plenty of opportunity to catch, you know, at least 10 to 20 pips on that move. Some days tend to trend one direction all day, and other days like today, you can see a very strong currency on all time frames goes weak for a couple hours, and then the strength comes back. So, you know, when the longer time frame trends are up, it usually, you know, the trend will tend to resume that way. It's just like the CAD. The longer term trends down, you have about an hour of strength right here. It's pretty safe to assume some weakness will come back. And it doesn't really get intensely weak. And we have about 20 minutes of strength here. And then weakness comes back again. It's more likely to have shorter up moves than currencies where all the time frames, longer time frames are up. That's why the pound has 2 hours of strength here, half an hour of weakness, half an hour of strength, half an hour of weakness, you know, 2 or 3 hours of strength because it matches the longer time frame. That's why we use a very intuitive way of looking at all the currencies like this to trade in the ones that, you know, obviously have the highest odds.